Okay, I was looking at the wrong spot for the link. Let's try this one. So we can stay here in Discord for the audio, because if you look at the YouTube live stream, there's going to be a lag in audio. But let me know if that link works. Okay, cool. I pulled it up on my other computer and it looks like it's pretty clear. Okay, yeah, sweet, it looks pretty good. All right, yeah, so real quick, I'm not gonna be talking too much about, you know, strategy and theory and all that on this stream. I just want this to be going over the project real quick so that anybody who, you know, might be having some issues, a lot of people are completely new, and it might be kind of intimidating, you know, trying to, you know, whip something up really quick. So if we have a blank chart open, we can pull up the indicators that are used within the strategy. First, we have a 200 period EMA. Let's put that up there. And then we have a RSI. Cool. So the strategy is really simple. It is a momentum strategy. Price is above the 200 EMA, and then whenever price, these lines on the RSI by default are 70 and 30, but we're actually using the 80 line. So as price is above the 200 EMA, then we're going to be buying whenever the RSI crosses above the 80 line, and just holding that position until the RSI crosses beneath the 50 line. So it's an intraday strategy that's just designed to get us in whenever price is moving strongly in our favor in direction of the trend. That's, you know, for our trend indicator, we're using the 200 EMA. And then we're just holding that position, hopefully every now and then catch some pretty large wins, and then exiting whenever the RSI crosses below the 50. It's a pretty clear premise and can be created in the builder pretty quickly. So here's the builder. Here you can select your strategy. We don't have it made yet, so we just leave it as is. Go to General, and we can name it. I already have a couple ones that's named Project 1, so we'll just do P underscore 1. I can't do underscore in this for some reason. Okay, we'll just do P1. Default properties, we'll leave that default right now. Additional data, we can skip that. Inputs and variables, we can skip that. And then we get to conditions and actions. So this is where we can create our first conditions. So we'll go to add price close. So we choose price, go to close, because we're going to be using the close price is greater than the 200 EMA. Here, the plot on chart option allows us to see whatever indicator we're working with on the chart. So if we're reviewing the strategy just to make sure that it's executing properly, we can see the indicator on the chart. Yeah, it's actually pretty useful. You only have to check it once, so you know, if we're going to use the 200 EMA at some other point in the strategy, you don't have to check it again. The period we can set to 200. Next we have the RSI condition, so we go to indicator, scroll on down to the RSI, and the thing that a lot of people missed was actually choosing the correct value plot. Because if you notice, the RSI indicator has two lines, which is the RSI itself and the average of the RSI, which is the smoothing line essentially. So it's a 3-period moving average of the RSI. That's just designed to filter out some of the noise. So it's just to smooth the RSI essentially. But the condition is whenever the RSI crosses above the 80 line, not whenever the average of the RSI does. So we choose the RSI for the value plot, and then crosses above. And to get that 80 value, we can go to miscellaneous, choose numeric value, and then choose 80. So RSI crosses above 80, and it's using the price close. So price close is greater than the 200 EMA. RSI crosses above 80. We enter in our action, order management, enter long position. Now we open up a new set, and this is going to be our exit condition. So actually we can copy and paste within the builder to save some redundant work. So we can copy that and paste. Now we're going to do the same thing over here, RSI. It looks like I forgot to choose plot, so we're going to check mark at the plot. RSI crosses below the 50 line and make sure the value plot is right. Go to our order management, and now we're just going to choose exit long position. And that's it. So I'm going to go ahead and compile. Put that over there. Go to new, go to strategy analyzer. Now we can go ahead and choose our P1. Now the next thing we needed to do was test this strategy across a basket. The way you do that is you have to create an instrument list. If you don't know how to do that, then you can go to the Setting Up NinjaTrader channel. It's right here. Actually, I didn't post it there. Where did I post it at? I'm not sure. I thought I posted it somewhere. Maybe I Gave someone instructions on how to do it over direct messages. But I'll definitely post that if you don't know how to make an instrument list. You create the instrument list, and once you do that, or actually if you've already downloaded data, then you probably know how to, because you had to make the instrument list to download all the data. But when you're in the strategy analyzer, you can actually choose an instrument list. So here we have the index futures, the main ones. You can hit select all, and now it's going to basket test across your list. Let's go ahead and run it on the 15 minutes. You can include commission, exit on session close. A time frame this high will probably benefit mostly on allowing it to swing, but we're going to go ahead and keep exit on session close checked for now. So go ahead and run it. And I forgot to choose my dates, so we're going to do 2021 to the end of 2022. But since I did do that, what date was that? I think that was, yeah, that was just the start of 2023. So from the start of 2023 to today, essentially since last Friday, these are the metrics combined. Did really good on EMD, so I guess we got some good momentum trends, and didn't do so good on the ES, but the combined results, it's still profitable. But now we can do it from the beginning of 2021 to the end of 2022. So here's the results for that. Trying to think, because I know some of y'all's screenshots did not have this much profit. Most of your guys were in the 40s. So let's look at the chart, make sure it's performing properly. So here we're above the 200 EMA. You can see it got us in on a pretty solid momentum move here. Whereas, if you're not a momentum trader and you're a pullback trader, then you definitely would have gotten in on this move, because you would have seen it going up really quick. But that's the whole premise behind momentum trading. It's buying when price is high, thinking it will go higher. Sometimes it works out, sometimes it don't. It definitely worked out here. Scroll back to see another entry. Looks like might have gotten a potential entry here. Let's make sure we didn't cross above 80, and we did not. Yeah, so that's what I'm trying to figure out now. So here the condition is correct. Another just beautiful momentum move, which in reality, I would just expect this to perform a little bit better on a lower time frame. But it's doing pretty good here. Yeah, so this is a perfect example here of the weakness of the strategy. Sometimes those momentum moves go really, high up, but then price just gets exhausted and falls back down. Here's another example. Looks like we had something fundamental occur here to give us a really big fundamental move. All right, so the strategy is performing properly. I think it would benefit more, as far as why these results are different than some of your guys's. I'll definitely review that and see what might be causing that. I'm not going to do it in this video just to save time. Let's go ahead and uncheck exit on session close just to see if it'll do better. Right now we got 64K on 7,000. So it did do better, allowing it to swing. Looks like it made about $7,000 more, and the drawdown, let's run it again. I think the drawdown increased slightly. Yeah, drawdown did increase slightly, but it did make us profitable on all 5 products. Barely on YM, but we did get it at least. Let's go ahead and run it on the 20-minute, see if an even higher time frame might benefit from this strategy a little bit more. And it certainly did. 87,000 on 6. Of course, the sample size isn't that large. You know, once we start getting into the higher time frames, to get, you know, a good statistically significant sample size, we need either a lot more products or a lot more time to work with. So maybe instead of 2 years, run on it, you know, 3 or 4 more years. I like the product route a little bit more to get that increased sample size, just because it really tells us more about the market conditions. Let's see. But I mean, this is pretty good metrics, given how simplistic the strategy is. Let's go ahead and bump it up to the 30-minute, see if we can get an even better result on a higher time frame. So right now we got 87,000 on 6, which passes that 10-to-1 ratio I like to start out with. I guess that's probably like 13-to-1 maybe. Let's check out the 30 minutes. So no, not so good on the 30-minute. And I don't feel like testing out any lower time frames just to save on time. NinjaTrader can be pretty weird sometimes. It will be running really smoothly, then you start doing maybe too many tests, or I don't know, it's weird. NinjaTrader loves to crash for some reason at random times. So I don't like putting too much load on it, especially whenever I'm trying to run the live stream. One thing I did notice that is also a good indication of robustness is if you have a strategy that does well on multiple time frames. You can't really nitpick specific ones. If it's just profitable in general on multiple time frames, then that's definitely a good indication that you're not overfitting. A lot of people can overfit parameters to say the 5-minute time frame, and then they'll test it on the 4-minute time frame, and then the strategy just explodes. It's that shouldn't happen. There isn't that big of a difference from the 5-minute to the 4-minute. Just like how if I test it on the 15-minute, it should still do pretty much the same on the 16, 17 minute, and so on. And we're also, we're generally profitable on multiple products as well. We can test some different asset classes really quickly, but real quick, just to, if you're doing the project, all you would do is just click on combine results, and then you would take a screenshot of this entire analyzer. You want to make sure It's on combined results. And then that's it. And that's the whole project for that. And the next project might include adding some other elements onto this strategy. But real quick, I kind of want to see how we perform on some different asset classes. I don't expect any of them to perform as well as the indexes. Simply, indexes just are the most traded, have the most volatility. So normally your indexes are going to perform best overall. But if your setup is doing well on some other asset classes, then it provides, good opportunities for diversification. I don't mean performing as well. You'll see that just having products that are profitable in general is what you want when you're running on many different products, because it all helps your drawdown. And that's the only thing we're trying to accomplish whenever we're diversifying. Diversification is not to make more money. That's not the point. It's to decrease your drawdown. Now, at the same time, if you decrease your drawdown, that also means you can have more leverage potentially. You can take a larger position size because your equity curve isn't having as many, deep swings. A good example of this, though, is if you look at the individual performance of these indexes, you can see how NQ is almost always the most volatile one. It has a lower tick size than ES, however, it just moves a lot more. So it makes up, without a doubt, that lower tick size. But the max drawdown on that was 11,000, whereas our entire max drawdown on combined results was only 6,000. Whereas if we only ran the strategy on NQ, then we're going to have to account for that when we're trying to deploy the strategy, trying to see how much capital we need to withstand the potential drawdowns. But Gold said he wanted to try it on some Forex. Forex normally always does terrible because it's just Forex. But we will see what happens. We got 6J. I'm going to run it on. I don't think I have a Forex basket. I think I might actually. So I don't have the historical data for the actual Forex pairs, but I do have the futures data. It looks like I actually didn't make a Forex basket on here. Yes, I do. I'm seeing things. Forex futures. I'll be surprised if we're even profitable overall, but I have a little bit of faith. Looks like we're not. Let's see how we're looking on the chart. Here we got some good momentum, but we didn't get continuation. Definitely something fundamental occurred here. And so it's interesting. During this fundamental event, our momentum strategy worked very well. So that might get your brain stirring into potential improvements for the strategy. It's like another fundamental news event here by this just ridiculously sized candle. This time we didn't get continuation. It just kind of fell off. Another pretty decent trend here. And would have gotten some continuation. Oh, I thought we were still exiting on close. Okay, we're not exiting on close. So the RSI did cross below 50 here. Just, barely it looks like, but nonetheless, it caused us to get another entry. No continuation on that. So definitely don't have to look at all the entries, but what this tells us is when you run, if you're running a momentum strategy, let's say on, 6E, which I think is just Euro USD, I think is 6E, it's like the main one. I mean, good grief, look at how noisy this price action is. That just looks terrible. So if we run a very simple momentum strategy that we know will get us in anytime a momentous regime occurs, when price is just going up, because it doesn't really get any more simple than this. If a momentum environment ever occurs, then yes, you already know where I'm going with this. It tells you a lot about the asset and what type of strategies you could potentially run on that asset. And we'll get more into that in the future. But you can make strategies, not strategies that are looking to deploy and run, but strategies that are specifically designed only to assess market environments. So yeah, gold hit it right on the spot. If a momentum strategy does really bad, on the euro, then maybe that tells us that the market is much more probable to mean revert whenever it hits oversold, overbought conditions. So maybe, if we build a mean reversion type strategy for these Forex pairs, we'll get much better combined results. Whereas the indexes, are much more suited to those momentum environments and trend continuations. And that's, of course, where the element of having, different types of strategies running on different types of products. So we've tested on Forex. Let's do some grains. It's kind of curious. Grains normally don't have that much volume, so I don't really expect to get much momentum. It did freaking amazing though, so that is just awesome. So it looks like grains gave us some good momentum moves these 2 years. We got some livestock. Some more in the category of agriculturals. Looks like we're profitable overall on the livestock. Metals are usually a hit and miss. Honestly, copper is usually my best performer. You would think it'd be gold, but it's just a hit and miss with metals, to be honest. And sure enough, copper is the best performer here, whereas gold is the worst. So you can see the absolute enemy of a momentum strategy right here, But like I was just saying about the Forex pair, if it does this, if it's more probable to mean revert when it hits these momentous conditions, then, it's just slapping you right in the face to what type of strategy you should build. Which I can kind of see gold, being more mean reverting. Yeah, so I'm not going to say this type of strategy isn't trend following, because you could, but I mean, it depends on how you think about it. Because if you had a trend following strategy and you only bought like breakouts, then this would kind of achieve the same thing. The key thing that makes this momentum strategy is that you're buying as price is going up. You know, like we're buying whenever price crosses, yeah, buying strength. When it crosses, you know, not the 70, but the 80 line. So we're buying, you know, if you look up what momentum strategy actually is, it will state momentum traders buy price high and sell high. You buy high and you sell high. So that's why I would definitely class this as a momentum strategy. Whereas most trend following strategies, it's going to have some sort of, okay, we're in the uptrend, now let's wait for this to happen, you know, to trigger that entry. Let's wait for a pullback, or let's wait for divergence. You're going to be waiting for something if you're you know, if you have a trend strategy. So metals does terrible, right in line with Forex. So that tells us that, you know, maybe Forex and metals are better for mean reversion. Whereas cattle likes to trend a little bit more, likes to have those momentum moves. What else we got? We got the treasuries. Let's see how treasuries work real quick. Just awful on treasuries. Do I not have data? I might not have data for CQ. No, I don't. And there's actually a treasury we didn't put on. Yeah, so treasuries definitely take a different approach. Treasuries is pretty much where the scalpers live because they have the best tick sizes. They move extremely slow. I mean, if you look at the price action here, I mean, we're on the 20-minute chart, okay? And as you can see, price doesn't really do a whole lot. But it makes up for that in the larger tick size. This is a lot where like people will look at market internals. They'll enter a trade, look to make 2 ticks. Because literally if you make, like on ZB, if you make 1 tick, literally if you profit 1 tick, then it pays for the commission of like 8 trades. So, which normally the issue is scalping and whatnot. The issue with scalping is typically commission cost. So this is why ZB and UB, I want to test it on UB, is the Ultra Treasury bond, which generally gives the best performance. I guess I didn't download data for it on this computer. My other computer has UB data. And I need to add UB to the instrument list for y'all too. I think I should have coffee data. Let's see how coffee did. Coffee was save the day. Hey, look at that. Coffee did great. Coffee's my friend. Okay. So yeah, we can get more on treasuries. Treasuries really offer a very wide space for diversification. But the strategies I have built for it are very mean reverting type strategies. So I'm not too surprised that we didn't do too well with this momentum strategy. Coffee did great. Livestock. Was it livestock? I think livestock did good. I think the grains did good. We didn't even do energies. Should have, yeah. Here's our energy list, which is crude oil. Looks like I don't have Brent crude, but nonetheless. Yeah, we actually did test some livestocks. I tested livestock after the grain. And let's test it out on the 4 major energies, being probably heating oil is going to do the best if I had to guess. Let's see. heating oil takes takes the cake. Heating oil has just done great in like the past year. You can see, I went over this in the other session, that recently in the past year, heating oil has just been taken off. It's been giving amazing setups, where normally, you know, crude is the main one. But all right, and lastly, was tested on our major list just to see how we did overall across the 25 major contracts. You already know we're going to do terrible on Forex and whatever that other group was, I can't remember. And there we go. Extremely simple strategy. Literally 0% overfit. Haven't optimized nothing. And testing over this batch of products, you know, we got 1,100 trades. That's not a whole lot, but you know, it's definitely better than like 200 or something. And it's a lot more reliable, seeing as how we haven't even optimized. So this is just a base premise that we created a system for. The premise being simply buying when price is going up, hoping it keeps on going up. You know, that's momentum strategy 101. And you can see whenever if we just ran it across, you know, 25 major futures products, even though we've had just some terrible performing ones, you know, minus $12,000 with a $15,000 drawdown, you know, all these terrible performers, the bottom line is still pretty damn good, you know. Really good net profit to drawdown ratio right there. You know, if we, in real time, of course, you could turn the strategy off on some of these performers, but the way it really works is you're always actively managing your strategies and what you're running them on, because gold might have done terrible with this strategy in 2022, but we know the premise of our strategy, which is capturing momentous moves. Okay, so maybe in 2023 gold starts putting out some really momentous moves, and now what we have is a strategy designed to capture momentous moves. So we're ready to deploy for when that market condition occurs. And that's kind of the way people should be approaching any strategy that they make. You know, I went over this on the last stream as well. That's why you need to have a simple strategy that is designed to profit on that market condition. Because if you run this momentum strategy, let's say you ran it on gold and it did terrible, you can't be mad at the strategy for not profiting whenever the market environment that you designed the strategy to profit on didn't even occur, you know. So you should spend more time not trying to alter the strategy. The strategy is fine, exactly. No regime. You need to spend more time thinking, okay, well, how can I try to put this strategy in a environment where momentum is more likely to occur? You know, it's not about using a lagging filter to then be like, okay, now we're in a momentum environment, so now, we turn the strategy on, because that's just going to lag and it's not going to improve anything. You have to find a way to think, okay, this instrument, this time, seasonality essentially, price is more likely to give a momentum move. We saw that on Forex, maybe just off the top, that maybe before news events on Forex, a momentum move is more likely to occur. We're not going to put some lagging indicator to try to indicate whenever, a momentum move is occurring, because then the news would drop and then the momentum move would happen and then you'd get in. It just wouldn't work out, Let me think. So yeah, this is generally how I approach things at first. Create the strat, or come up with a premise. You see in strategy ideas, people post premises. Joe Friday had some great examples. Buy a market selling extreme after it sold off a bit. We see what he's talking about there, because those kind of seem like the same thing. But yeah, so wait for an extreme oversold condition if the overall trend is bullish. So, that's a good premise. So you would start with just trying to quantify with indicators that premise in the most simplest way, and then just play it out, run it. I'd run it across these different asset classes, indexes, metals, grains, and all that good stuff, just to get a feel to see if that pattern is occurring enough, because that's all you're really relying on. If you create a strategy that's designed to profit on a pattern, then the profitability of that strategy is solely determined by if that pattern is happening often enough. We find out with Forex, momentum moves happen sometimes. We saw that on the chart, that sometimes, momentum occurs, but over the course of a large sample size, Forex is definitely not a good candidate for those momentum moves unless we add some additional filtering to them. So once we get a good feel for everything, what's awesome is this is a really good scenario, because without doing anything, we're profitable on more than half of our products list. Like I said, we do need to add UB, the Ultra Bond, and this list actually doesn't have any treasuries, but that's just because the treasuries are really in their own class. Looks like I have one. No, I don't think ZW is a treasury. Let me see. ZW is wheat. So I don't have any treasuries in this list. And so yeah, treasury is a different topic, but there's plenty of asset classes here. This is like the main 25 product batch, and we're profitable on over half of them without any optimization, without any regime filtering, without any of that. And that's only because momentum is present in almost all asset classes. Definitely is not present enough in gold or silver, but it is still present. Let's see what yeah, see, so Rock is already looking for the next step, Thinking about the short side, because trust me, there's actually more money to be made on the short side when it comes to momentum, and that's just due to price shocks. So yeah, a lot. Yeah, so we're getting $130,000 with just one contract, not even trading the short side. Um, so could definitely add a short side to it, and then very can play around with some very slight optimization. Start looking into some leading indicators, and you just go down the rabbit hole, which we'll do in the future. Yeah, I think this is a great intro video. Um, shows how to create the project and kind of how we're going to be approaching things. Yeah, I agree. It's awesome, guys. I'm glad y'all are seeing some value here. Oh yeah. And see, all of these ideas are fantastic. I can't stress the importance though of starting at this just core fundamental state, because a lot of people right off the bat would think something like this wouldn't even be profitable. So they would maybe right off the bat they would like add some other indicators, maybe some volume stuff or some additional trend confirmation stuff. To start adding all this stuff in without even testing the core concept out. But now we have the core premise built, we see how it performs, and then we build off of that. Because really this is already good. This is already good results. So maybe we'll add a little exit type, start tweaking things very slightly and see if it improves the baseline. But we want our baseline to be good, because if we build a strategy that just exploits a simple pattern, we're going to know right off the bat if that pattern is worthwhile by running initial tests like these, and if, hell, we're already profitable just trading the base pattern. So now we can look into adding slight tweaks here and there to get some really good results. Exactly. That's a huge topic, reducing, you want to, because it's so easy to ruin a strategy, it really is. And it all starts with over optimizing certain areas of it. So the good thing to look at is just to ensure that we keep our baseline tests. Like right now it's showing on my screen, we're profitable on more than half of the products, right? And so if we create some condition that maybe increases the profit to 300,000, but we're only profitable on 4 products, no, something's wrong. You're going down the wrong path there. Now, if we bumped it up to 300,000, and the drawdown's a little bit better, the profit factor is higher, everything was looking pretty good overall, but then maybe 6J and 6A dropped off into the negative, then I probably wouldn't care too much. Oftentimes, I like to keep an eye at all of my drawdowns as well, and not just focus on the positives. If we if we created a new rule and maybe our total net profit on gold went from, -12 to -5, and maybe -5,000 was our biggest loser, and it went, a -5, -4, 4.2, whatever. So you're looking at everything, and that's whenever you gotta be smart. I mean, really, at the end of the day, you have to be very aware of what's going on, keeping track of all the numbers. You can't put an exact science on it, but you just got to make sure what you do is very slightly. You got to, every time you think about adding a rule, you just got to ask yourself, like, is this a rule that is going to perform robustly long term? You got to ask yourself that every time. Or else you risk ruining it, I was about to say something else, but I forgot. I think y'all are getting the overall idea, though, for sure. And of course, we're going to go through optimizing. I think I'll probably play off of this strategy for the next project, just to see what people can potentially come up with. Oh, I remember what I was going to say. Make rules, and this is a big one, because almost all the strategies I've built, it's not from looking at charts. It's just from thinking of logical premises in my head. A lot of traders mess up making strategies look at charts. Now, if you're completely new, then maybe you need to look at charts a lot more. But I've been trading for a long time. I traded discretionary for a long time. So it's relatively easy for me to come up with strategies all day, just off top of my head. But since we know our core premise for this strategy, and maybe you want to add an additional condition, rule, exit, target, whatever, don't look at charts. Just try to think of it in your head, because that's going. If you're able to think of it in your head, that has a much greater chance of it being a good, generalized, robust rule instead of looking at some chart. Because honestly, if you come up with a rule looking at a chart, then right off the bat it is a 100% overfit rule. I'm not saying you can't make robust rules from looking at a chart, but by nature it is overfit because you're making that rule based on the data you are looking at. Yeah, exactly. And that way of thinking, gold, is really what causes people to try to think they can have those tiny little stop losses. They're like, man, I could have just risked the low of my entry candle, and I could have took 20 contracts and had a 3-tick stop loss and made $1 million. Like, and then they'll try to roll with that moving forward. But once you actually put data to it, I was talking about stop losses a lot yesterday. And I mean, once you put data to it, you'll find that those tiny little stop losses are a pipe dream and actually just ruin almost any strategy. But we'll definitely touch on that a lot more. Wouldn't be too hard for you guys to test yourself. You know, testing the low of the entry candle or testing the 2-period low. Testing the previous swing low is about as tight as you can get it. I'm just going to go ahead and tell you right now. Testing the previous swing, so you know the previous support level, is about as tight as it's going to get. Whenever you add a tighter stop loss, you know, of course you got your baseline metrics. In almost all cases, tightening your stop loss increases your max drawdown. That's right. So right now our drawdown 7,000. I'm 100% confident if we add, you know, a nice little cute tight stop loss, our drawdown would tremendously increase. Exactly. Yeah, I mean, simply put, your stop loss is getting hit a lot more, and your drawdown doesn't reset, you know, until you hit new equity highs. And so your new equity highs are reliant on those big wins. But now you're not getting those big wins because you got this nice little tight stop loss. So that falls in line with expectations and just being realistic and just looking at the data, you know. I mean, that's all we're doing here. In this scenario, like if you run a strategy, your only goal is to create an edge, you know. Just make a freaking edge. Once you do that, assess the drawdowns. Like, okay, I've created this strategy. Now, how much capital does this take to run it live? For this strategy here, our max drawdown was 7,000. We could round that up to 10. So 10,000, we can times that by 3, 30,000, add 20,000 on top just for a good measure. So now we got a $50,000 account to run this strategy. And if you would have ran this strategy from 2021 to 2022, you would have almost tripled your account size. So that's the proper way of thinking about it. Now, obviously, I know some of you guys ain't got 50 racks to spit on strategy, but that's not what we're talking about right now. I've spoken with several members. Just focus on making good strategies right now. Okay, focus on making good, robust strategies, you know, that can exploit several different market patterns. Once you get to that stage, you know, and you get the ball rolling, how much money you have isn't going to matter. Okay, there's going to be opportunities to use your strategies. Yeah, I completely agree, Gold. You know, it's really forcing yourself to critically think about premises for strategies or rules can go a really long way. But all right, guys, I'm going to go ahead and wrap this up. I'm going to hope that the stream did correctly and that we have... Well, this time there was nobody else talking, so it's only my voice. And we can see the chat, so that's good. We can see the chat. You can hear me talking, so that's pretty good. Should be a pretty good video then. So I'm going to go ahead and stop this.